In today's episode, I'm going to teach you a simple candlestick trading strategy that you can implement in your own trading starting today. Learning this strategy will change the way you read candlestick charts, and it'll change the way you trade the markets. And for some of you, it's going to blow your mind. Now, let's get into the whiteboard here, and I'm going to show you an example of a very simple candlestick chart pattern. This is a pattern where each individual candlestick is communicating sentiment in the market. And from this chart, I can see very specific buy and sell signals because I've learned to read the language of the financial markets. Each one of these individual candlesticks has meaning that is communicated based on the shape. So what I'm going to do is I'm actually going to create a diagram of showing you all the different shapes and the meanings that they communicate to me. But before I do that, I want to show you an example of what not to do in your trading. Take a look at this if you can bear it. Whenever someone sends me a chart like this, I cringe because this right here is the epitome of a fearful trader. I know because that's how I was when I got started. I had a small account and I was so afraid of loss, I was looking to add any possible indicator that I could that would tell me and warn me not to take a trade because I had a high degree of probability that I would lose. What I ended up with was a chart that looked like this, where before I would take a trade, I was checking each one of these indicators to make sure it wasn't telling me, no, don't take the trade. So I was like, check, check, check. But after you go through 15 and 20 indicators, well, some of them are going to give you opposite signals because technical indicators are these complex mathematical formulations, and they're just not all going to be consistent. And at the end of the day, you know what I wasn't able to see? I wasn't really able to see the candlesticks anymore. The candlesticks got buried under all of these indicators. Now, one of the things that it's important to know about indicators is that they are lagging behind price action. All indicators lag behind price action because they have to have the price action occur in order for the formula to work. So the current price right here will factor in to an indicator, but it's going to take a while for that price to finally move up enough that the indicator is going to give you that positive buy signal. And so the result is that if you're trading off of indicators, you will always be a little bit behind the breakout. The breakout has to occur in order for the indicator to finally go positive, if that makes sense. So let's take a step back for a second and just look at the candlesticks. This is where we want to focus. So when we're looking at our chart, I want to get rid of all of these extra indicators. To me, I don't think they're helpful at all. So let's just click that to remove all the indicators and go back to a really simple chart. Now, okay, I think it does make sense to add a few indicators, and the indicators that I would add include the following. I'm going to encourage you to use the same. This is what's worked really well for me in my career. So the first indicator is the volume weighted average price. The second is the 9, the 20, and the 200 EMA. The third are volume bars. These are my must-have indicators. A fourth bonus one is MACD, which is the moving average convergence divergence indicator. I like that. And then of course, these are all on a standard candlestick chart, which would look just like this or just like this. Now, here's an example of a chart that actually has these indicators on it. So right here on this particular chart, you can see that I've got my 200 EMA, which is down here in purple. I've got my 20 EMA in this blue. I've got my 9 exponential moving average in gray. And the volume weighted average price is right here in orange. I have my volume bars here. And on this one, I don't have the MACD. So this is a very simple chart from the perspective of technical indicators, and that allows me to focus my attention directly on these candles right here and finding my entries. Because here's the thing, these candles are telling a story. The problem is, as a beginner trader, I hadn't yet learned the language of what each of these candles was telling me. And so I would see them, but I didn't know what it meant. And that's why I went to these complex technical indicators in hopes of getting simple red light, green light, buy, sell indicators. But it's much better to instead spend the time learning the language. So that's what we're going to do right here. Okay, so let's start here. I'm going to begin to give you the definition of each of these candles. So first of all, when you look at this pattern right here, what do you notice? We've got 3 candles moving up. And I want to point out that each of these candles is getting slightly bigger than the one before it. this shows there's an accumulation of buyers that are coming in, and this shows increasing sentiment as the price is moving higher and higher and higher. So this candle, in its simple form of just being a green candlestick right here, maybe it has a little upper candle wick, maybe it has a little lower candle wick, but in any case, this is called a long body candle. A long body candle is very bullish. So I'll give it three pluses. This is one of the strongest candles that we can have. Now, what we want to see when we're looking at a chart is that the candles are getting bigger as the price is moving higher, as it did right here. That's what we want to see. So what if we saw the opposite? Just as an example, what if we saw a big green candle, and then the next one smaller, and then the next one smaller, and the next one smaller, and the next one smaller? If this trend continues, what's going to happen? They're going to get so small that they're actually going to start, what do you think would happen next? Going down, right? Because you could see how the sentiment is just petering out. So if the candles are getting smaller and smaller and smaller in size as the price is going higher, it shows that the trend is getting exhausted. Now, just looking at the shape of the candle and the size relative to the previous candle can give you that context and help communicate that to you. So we want to look at the long body candles, and in the context of a strong uptrend, we want to see that the candles are getting bigger and bigger and bigger. So I'll make a note here. Note number one. Number one. So we want to see, and I'll just draw it, but we'll make a note here. We want to see the candles getting bigger and bigger and bigger. Note number two, if we see the candles going from big to getting smaller and smaller and smaller and smaller, that indicates a high likelihood of a reversal. So this is extension going up. This is reversal coming back down. And they can be starting with long body candles, but relative to the previous candle, that's where we get that context of whether the trend is going to continue or not. So our first candles here are long body candles. 1, 2, 3, and they're getting progressively larger. And then what is this? This candle, if we just think about the sentiment of this candle, what is happening right here? So let's take this candle right here and let's zoom it in. So let's say this is a 1-minute chart. If this is a 1-minute chart, this is 1, 2, 3, 4, 5, 6, 7, 8, 9 minutes of price action. If we look at this chart right here, this is a 5-minute chart. So this is 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, about an hour of price action in this chart right here that you see on the screen. So regardless of whether you're using a 1-minute or a 5-minute time frame, when we're focusing on the candlestick patterns, we're looking at these shapes. So if we zoom into this, let's say we zoomed into a 10-second chart here. So a 10-second chart would therefore have 6 candles. That makes 60 seconds, which is 1 minute. So what happened here is the price at the beginning of this 10-second increment, right in here, we're going to draw the chart, the price opened, and let's just say the price squeezed up. It squeezed up to the high right there. So what we have is our open price right here. And then we have our high right up here. And then the price declined. It declined a fair bit. It dipped down here like this. And then it bounced back up. How many candles is this? 1, 2, 3, 4, 5, 6. Perfect. So then we hit a low down here. And then this was our close. So we connect right here, right? So the open and the close are the same. The high is up here. The low is down here. So we have candle wicks. So this is how this candle is created. And this price action right here, what does it communicate inside this candle? A tug of war, a battle is happening, right? You don't need a technical indicator to tell you that. You can see it right here based on the candlestick form. This is a battle that's occurring between the buyers and the sellers. We call this candle a doji candle. And so I'm going to draw it just like this. This is a doji right here. And this right here is a long-legged doji. So it's also a doji candle because it opened and closed at more or less the same price. Now, a variation of this doji would be this shape right here, which is called the dragonfly doji. This is a dragonfly doji. This is where the open and close is at the top, but it has this long tail down here, this candle wick, like a dragonfly sort of would. It's not precise, but you get the idea. And then this is a very ominous pattern. It's a little bit too big, more like that, called the gravestone doji. This communicates a lot of weakness. Why? Well, let's go back over here. So this is a standard doji right here. So the price went up, it pushed back down, but right here, clearly we got squeezed back up. So this shows that there was at least some buying pressure because the price came back up before the close. So what if we took that away? We took away the buying pressure there. Then what you have is the price squeezed up, but then just came all the way down, right? So let's say I had 2 more candles of being right here to make the full 6 candles. This shows more weakness. It pushed up and it came down and it just was not able to hold strong. There was no strength going into the close of the candle of that session. And so then what's very likely to happen is the next candle, if it breaks this low here and drops like that, that's the formation of this red candle right here. Okay. So what we're really doing when we're zoomed out is we're looking at sort of the last, in this case, 1 minute. But if we zoom in here, we're getting an even better picture. Now, you could zoom in even further if you wanted to a 1-second chart, and then you would see everything happening in real time. And the next level of being zoomed in really is starting to study and read the time in sales, the level 2, which is where you see the depth of market and you see every individual order that's going through. But let's take a step back and just continue to focus on these charts. So the gravestone doji is the most bearish or the weakest of these patterns because what happens is the price squeezes up and it comes back down. So what we know are topping tails like this, upper candle wicks, like this right here, are bearish. So now let's look at this example here. This is bearish, that upper candle wick. But what about down here, this lower candle wick? You see that right down there? That is bullish. So lower candle wicks are bullish and upper candle wicks are bearish. So let's make a note about that. So when we're talking about dojis, so note number 1, upper wicks equal bearish. And number 2, lower wicks, candle wicks, equal bullish. So lower candle wick is bullish, upper candle wick is bearish. Okay? All right, so now let's take this a step further. So now you've learned, and I'm going to erase some of these, but I'll keep, we're going to start making them a little bit smaller. So we're going to do the dojis along the top right up here. So we've got the standard doji, the long-legged doji, we've got the dragonfly doji, and we have the gravestone doji. I feel like I'm writing in Japanese, but for what it's worth, these are actually Japanese candlesticks. These were formed in Japan in the 1700s to trade, to track rice futures. And then when the Japanese market, stock market opened, the official stock market in the 1800s, the late 1800s, Japanese technical analysts were using these types of charts. So Japanese candlestick charts. Anyway, so this is, these are our 4 dojis right here. And then I'm going to show you a variation here that's called a spinning top, and it has a small body in the middle. Now, this can be either red or black, but it has a small body in the middle. That small body, it's like a doji. It still communicates indecision. So the extent that it's slightly green or slightly red just shows a little bit of a preference, slightly towards the bulls or slightly towards the bears, but only slightly. So, and then we have, of course, a long body candle like this. A long body red candle would, of course, be like this. And you could have a small little green candle or a small little red candle like this, which would be small body candles or short body candles. So each one of these communicates sentiment. These are candles that are communicating a battle between buyers and sellers. These are candles that are communicating much more strength. Let's talk about another candlestick pattern here. So this is going to be either a hammer or a hanging man. So it has 2 names. It's a hammer when the price has been selling off like this, and then we're looking at a hammer at the bottom right here because it's said to be hammering out the base. So this is a hammer in the context of a downtrend, that candle right there. Again, note that it has that bottoming tail, which shows that the buyers came in and brought it back up. So it's bullish in the context of a downtrend. Now, in the context of an uptrend, where you have a bunch of candles moving up, and then all of a sudden we have this little candle here, this starts to be a little bit more bearish because it's obviously showing there's a lower candle wick. So there was a degree of selling. Yes, it got bought back up, but in contrast to previous long body candles, it's not as strong. So if this, for instance, was the little red hanging man here, that would be an indicator for a possible short-term correction. And again, this is a trading strategy that is based on, just at the basis, understanding what these different shapes mean. So again, whether it's red or green, just leans the preference that it's either a little bit more bearish or a little bit more bullish. So we've got hammer slash hanging man, depending on whether it's occurring at the top or bottom of a trend. And then we have, so I'll just draw this one in black because it doesn't matter which color it is. And then we have the inverted of that same shape right here. This, in the context of the price moving up, is called a shooting star. So the price is moving up here, and then all of a sudden right here, you have this large upper candle wick. And what do we know about those upper candle wicks? They're bearish. It shows the price squeezed up and is getting pushed back down. So if we erase this, and again, it doesn't matter if it's red or green, but it's that candle wick that we're looking at because the price got pushed back down. This is an indicator of a possible reversal coming back down. And I would say right here, these are your most important candlesticks that you need to know in the language of technical analysis and reading candlestick charts. So you've got 2, 4, 6, 8, 10, 11 candlesticks right here. I would say these are the most important. And of course, these are the same, but one is red and one is green. So now let's go back here and look at this pattern. So when we're talking about an actual trading strategy, what I want to see is that as the price is moving up, the long body candles are getting bigger and bigger and bigger. That's communicating really strong sentiment. And then up here, at some point, after we have a nice squeeze, I'm going to start thinking we're due for a reversal. So let's look at a couple examples here and see where the reversal came in. And I'll actually just briefly animate this for you so you can kind of see. One of the patterns that I really like trading is buying the first candle to make a new high. So right here, as the price is squeezing up, this is an example where we have a little topping tail, a small topping tail, another small topping tail. So a little bit of, weakness as it's moving up, a couple bottoming tails. These are not as strong as large, long body candles. And notice how this candle's getting a little smaller at the top. Okay, so then we get a red candle. Red candle comes in, it starts to pull back. It bottoms out, and at this point, starting right now, we've got 2 red candles. If this next candle breaks the high of that level, what that communicates is a multi-candlestick pattern. It's a 2-candlestick pattern. It only has 2 candles involved, but we call it candle over candle. So we've got the red candle that came down here, and then the green candle that breaks the high. This candle broke over the high of this candle. It's called a candle over candle formation. So we've got the candle over candle formation right here. This candle, let's see, we're going to watch. So it doesn't happen yet. This candle happens to be green, which is fine. It's not a buy signal yet. There it is. First candle to make a new high. That's where I get in. So now let's look at a couple of these patterns. So you've got the price squeezing up here, and then we pull back, a little bottoming tail on this candle, a little topping tail on this candle, and then it starts to pull away right here as it breaks through the high. Notice that the volume is on light pullback on the red candles. We get a nice resolution there as it squeezes higher. This is another example here. This is a particularly nice one. You get a couple of nice green candles, a little pullback with a topping tail right there, a small red candle, a bottoming tail right here. Love to see that bottoming tail. That shows us right there that buyers are bidding it up. And then as soon as that first candle makes the new high, the candle over candle formation, it goes all the way up. And this goes, for what it's worth, from $5.60 to over $7 a share. That, a 20% move in, let's see, this is a 1-minute chart. A 20% move in 2 minutes. That is volatility. Now, I should remind you here that when you're reading candlestick charts and you're trying to perform this level of technical analysis, it's only going to work when you make sure you are trading something that has high relative volume, that typically has some type of catalyst, which is bringing the volume in, that's bringing the buyers in, and is at least up 10%. That's my personal preference. If something's not up at least 10%, I don't even want to trade it. So here we can see this nice move higher, this push up to the high. This is another one where we're going to see that same example that we just saw before. And now here's another example. In this case, there's no entry. So it doesn't matter what technical indicators you have. You can have them all gone. Look at this. You've got one candle that's green, a second candle that's green, and then what? High volume red candles selling off. We don't have that first candle over candle formation. All we have is high volume selling. There is no pattern, and there's no reason to buy. Now, it's possible that there's a technical indicator that's lagging, and because of these two big green candles, it gives you a buy signal right here. It's a little lagged behind, and that wouldn't be a good buy signal because the price is now coming back down. Another example here, two candles going up, and then all of a sudden, sellers push it back down. There is no pattern to trade here, so you shouldn't be losing money on this. You want to be making sure you're focusing on patterns that actually make sense. So waiting for that move to the upside, letting it pull back, and then catching that next wave up. Now, ultimately, when we're talking about these different patterns, they're all made up of the same individual candlesticks. The places that candlesticks are most significant are at the top and bottom of moves. So they're at correction points. So we know that the price never goes straight up. It goes up and then it pulls back. It goes up and then it pulls back. So in this area, we've got big candles moving higher, and then the candles start getting smaller. We pull back a little bit, right? We most likely will see a reversal candle in here, another reversal candle in here. Those could be one of our dojis or one of our topping tail, bottoming tail candles. And then we get another period of extension where the price moves away, and then it gets exhausted and comes back down. Looking for reversal candles in here, reversal candles in here, now predicting the next move up as the price pulls away. All you need in order to trade is the knowledge of these individual candlestick shapes, knowing what they mean, and knowing that they are most important when they occur during periods of extension. For what it's worth, because these candles communicate indecision, if the price is just going sideways, well, it's already indecisive because the price is going sideways. So you're not going to get more information from reading candlesticks. So candlesticks are only really valid and interesting when the price is moving quickly. Now, this pattern right here that I was showing you is one of my favorite patterns that I trade. This candlestick pattern right here of waiting for a pullback and then buying the first candle over candle formation, which is right here. This is where I'm a buyer. But this occurs within this context. So I need to be able to look for something that's putting in this nice big move here. I need to be able to look for the candles getting progressively bigger and bigger and bigger and bigger, and then wait for that first pullback. Then I'm looking for that dip. Now, if I saw on this, that bottoming tail, that's going to give me even more conviction to take this trade right here. I love seeing that bottoming tail. And if this, or if this was a small doji, maybe with a small red body, something like that, that would give me even more conviction. Anything with a bottoming tail shows me the price declined, but got bought back up. And that's what I like to see before I'm considering taking an entry. So we'll just make this a black doji. Here we go. Just go like this. So a little black doji there, and then a move back up. That's what I want to see. So this is just one pattern. This is one of the first patterns that I teach in my classes, because this pullback pattern, for me, is one of the simplest to see, the simplest to visualize, and one of my favorites, but it is not by any means the only pattern that I trade. So I have a PDF link that you guys can download. It's a 112-page PDF of my favorite chart patterns. This is a chart study guide. So the better you get at being able to recognize these patterns in real time as they're forming, you'll be in a unique position to be able to read the future, because that's what we're doing. We visualize the pattern. We can see the first part of it, and then we visualize what's going to happen next. So when I see this red candle, I see this doji, I'm visualizing 3 green candles following it. I'm predicting the future. Now, the traders who predict the future the best will be the ones who make the most money. So I encourage you to continue to study, continue to learn. And if you found this episode on trading strategy interesting, I hope you hit the thumbs up. I hope you subscribe to the channel for a ton more episodes just like this. So make sure you download that 112-page PDF study guide, and I'll see you for the next upload real soon.